What's up, guys? This is Tyler again with Division One Trading. This is the free Forex YouTube course. Go ahead and read the disclaimer if you haven't already. So, gonna get right into it. We're gonna go into basic chart patterns. So these are gonna be, we'll go over them, but right, your triangle, your little pennants, channels, right, things like that. Not just pennants, but flags, right? All those patterns. So chart patterns are a great way to break down and understand the market on a deeper level. So this gives us a sense of what is likely to happen next, right? We're really just building a frame of what the market's doing, and then we use all the other tools that we teach in the other videos to really trade the market. So because trading is a market based off fear and greed, it's never exactly the same. So once we identify a basic chart pattern, we can then further analyze what will happen next. So we're going to go through some here. So right here, these are continuation patterns, right? We're just going falling wedge. Really just call this a bull flag, right? It looks like the little pennant. Same thing here, right? Bullish pennant. Same thing, bullish rectangle, right? And really all this is saying is we're just getting a push and then some form of consolidation, whether that be a push in that or a push in just channel, right? So then here it's just the opposite here. It's just one push down, consolidation, continuation, right? They're all continuation patterns. Same thing here, right? Push up into the triangle and then expected higher, right? So that would just be examples of basic chart patterns. You have reversal patterns and all that. These are just continuation patterns. So, right, this is the pattern we're talking about. We're about to pull one up on the charts, right? But we're basically looking for a push. Then we're looking for the market to consolidate. Then we're looking for a push to trade. So when we trade these, remember on the trend line video, we can either have a fake out here and a breakout here, or vice versa. We could have a fake out here and then expect the breakout here, right? But just runs through it. This would be the opportunity, like I said, where we can expect a break and retest and continue in that direction. Okay, so framework one, right? So just finding a pattern. So here in the market, we just have a push and then a channel. So that built that same bull flag or just bull type movement, right? You get this big push here and then everything just consolidates, right? And so here, kind of like we talk about, you see the fake out and then breakout right there. So framework two. So you need now a pattern to act as confluence, right? So here you can see we're just throwing in another pattern. So we have that bullish leg, we have the channel. Now we're just using this level as support, right? So because the level can't get there, this level is obviously acting as a magnet and pushing it away. And then here, right, we break that trend, get the break and retest, and then trade away. You see how it trades up and then the wick trades down into it. You'll have to get on with that. So then here, that's just showing it. So chart patterns are a great way to understand the market and build ideas around that framework. Ultimately, they're not going to offer enough continuity to use by themselves. So using the videos 1 through 6 in the free Forex Academy YouTube series is going to help you build a strong confluence into your trades. So example confluence, right, would be a candlestick price action pattern. So like one of my favorites, here's just an example of a bunch of them, but one of my favorites is the engulfing pattern. So especially after market structure makes 3 highs, you see 3 pushes, 1, 2, 3. And then when there's an engulfing pattern up here with a candlestick chart pattern, right? So say that when they come up here, they started consolidating. And then when they give that engulfing candle, I'm trying to get a part of that. So right here, right, that's just what it looks like. So talking about going from the daily looking down into the 4 hours. So from the outside looking in. So here on the daily, we're looking at that bullish engulfing there. So here, this, you can see, right, this rectangle is showing this whole day here. Sorry about that, right? This rectangle is showing this whole bullish engulfing here, right? It goes open and then it goes low and then it closes somewhere up in here. Then, right now we're on the 4 hour, we can see that engulfing was the first leg of what is now that bull flag, right? So then we can expect it to trade higher, right? And that just gives us a hint, right, of what direction we should be trading, excuse me, right? It just gives us a hint into what is the bias on it, right? Bullish or bearish. In this situation, when we get that engulfing, it's not just an engulfing now, right? It's an engulfing that has this 4 hour chart pattern here that to go along with it. So builds confluence into it. Here's just another look. Then you can see it trades back down into it and then hits engulfing candles there as well. So bonus charts, we're going to go to the charts real quick and just cut up some trades. Just kind of scroll through and let's see here. Okay. We're going to go back to raw chart. So basic chart patterns, let's look at this morning. So we've seen it pretty much drop off this morning, but, right, so we push right here, see that push, and then you see how it consolidates. So we have this push and then this consolidation here. Right, so this is just the opposite. This would be a bear flag, right? It pushes down, then we get this consolidation. When it breaks down, right, simple break and retest there, and then trades significantly lower, right? Goes through that low and is now pushing lower. So there's a good one from today. And right after that, right, we got another push here. And then this one was more of the channel. See, it pushes down, consolidates, same thing. Breaks down, retests, sells off again. Let's look at another one. All right, so here's just a small example. We get a push, and then that same consolidation there, continuation pattern. We get another push here. Right, this pattern obviously not as clear. Right here wouldn't have any trade off of that. I'm kind of looking too small now. Price action in there is tough. Let's see, and then when you see larger movement like here, let's watch this one here. When you see something like this, where it really starts dumping like that, that's when you would start looking for continuation patterns, right? Because continuation patterns are not going to show themselves as much in consolidated environments like this. They're going to be hard to find, right? You want to look for them after big movements, right? So after big engulfing candles, right? So we've been looking here. We were looking over here. So now let's check this out real quick. On the daily, and we really don't have, or really this candle ended up being the engulfing. But here, so let's check this candle out. So here on the 4-hour, we have that engulfing candle. Right, so this is that engulfing candle on the 4-hour. And then we look at the market structure. Right, it's a bearish engulfing. So then once this breaks, right, one level is going to be a fake out, one's going to be a breakout. So this candle here right, this is that whole 4-hour candle right there, right? That's the bearish engulfing. Marked it right here. See that? So we get the bearish engulfing, then identify our chart pattern. We see the fake out, then we see the breakout. Once we see the breakout, we get the retest. That's a short. We would be in profit. Awesome, guys. Thanks.